Hey everyone, welcome back to Corporate Decoder, the place where we decode the mysteries of big business filings. And today we're looking at Rithm Capital Corp. Get ready because we're about to uncover what their latest financial report really means. And it's not just about numbers, it's about what those numbers tell us about the company's health. And trust me, there's always a story hiding in plain sight. Also, before we jump too deep, make sure you're subscribed and hit that notification bell so you don't miss any of our breakdowns. And if you want to chat more about these filings, join our Discord community. The link is in the description. Inception's after company's health, and trust me, there's always a story hiding in plain sight. Also, before we jump too deep, make sure you're subscribed and hit that notification bell so you don't miss any of our breakdowns. And if you want to chat more about these filings, join our Discord community. The link is in the description. Alright, so we're diving into a Form 8K, which is basically a company's way of telling the public about any big important stuff that happens between their regular quarterly reports. Think of it as a real-time update on key developments. The big event here for Rithm Capital Corp occurred on July 28, 2025. This is the date when the company announced its financial results for the fiscal quarter that ended on June 30, 2025. The main item we're looking at is the company's financial results. They put out a press release to share how they did in the most recent quarter. This is usually where the juicy financial details are hidden, so let's get to it. Essentially, Rithm Capital Corp is telling us how they performed financially up to the end of June. This is crucial for understanding their current business health and where they might be headed. Now, while this particular filing doesn't contain detailed financial tables, directly within the Form 8K itself, it does reference an attached press release, Exhibit 99-1, which is where those all-important numbers would be. However, the filing does give us some incredibly important context about what those numbers represent. We see the company talking about its common stock. This is the basic ownership stake in Rithm Capital Corp. When they report earnings, it directly impacts the value and perception of this common stock. They also mention their preferred stock, specifically the Series A, with a 750% dividend rate. Preferred stock is a bit like a loan to the company, but it's owned by investors. The dividend rate here is a key piece of information as it tells us how much the company has committed to paying out to these specific investors. Then there's the Series B preferred stock with a 7.125% rate. Again, this represents another layer of financial commitment for the company as they manage their capital structure through different types of stock. And we have the Series C preferred stock at 6.3075%. Companies like Rithm Capital often issue different classes of preferred stock to raise capital, each with specific terms and dividend rates. Understanding these rates helps us gauge the company's cost of capital for these specific issuances. Finally, they list the Series D preferred stock, a 7.00% fixed rate reset security. The reset part here is significant. It means the dividend rate can change after a certain period, which can impact both the company's cost and the income for investors. So what does this all mean? Rithm Capital Corp is a company that uses a mix of common and preferred stock to manage its finances. The prices and dividend rates of these different stock classes are vital indicators of investor confidence and the company's ability to meet its financial obligations. When they announce their earnings, these preferred stock dividends are usually paid out before any earnings are distributed to common stockholders. So a strong quarter means they can comfortably cover those preferred dividends and hopefully have money left over for common shareholders. Now let's try and infer what might have been in that press release. Generally, for a company like Rithm Capital, which is involved in real estate and financial services, we'd be looking at metrics like SIVE net income, which is the profit after all expenses, and earnings per share, which is that net income spread across all common shares, and revenue or the total money brought in from their operations, and importantly, how their investments performed, especially in the real estate and mortgage-backed securities market. If the earnings were strong, we'd expect to see solid net income and earnings per share, possibly exceeding analyst expectations. This would likely lead to a positive market reaction, with their stock price potentially going up. If the earnings were weak, it could mean lower profits, maybe even a loss, which would put downward pressure on their stock. For Rithm Capital, a key factor is how well they are managing their interest rate exposure. Since they have fixed to floating rate preferred stocks, changes in interest rates can significantly impact their costs. If rates go up, their cost of funding for these preferred stocks will also increase, which could squeeze their profit margins. Conversely, if rates fall, it might make their preferred stock offerings less attractive to new investors, but it could also reduce their interest expenses Without the actual press release numbers here, we have to make educated guesses based on typical SEC filings. But the fact that they're filing this 8K with a press release attached means they've got something to report, and it's important enough to share right away. You might also see references to something called extensible business reporting language. It's basically a way to tag financial data so computers can easily read and process it. It makes comparing companies and their financial performance much more streamlined for analysts and investors. And finally, the signature block. This is where the authorized executives of the company sign off, confirming that the information is accurate to the best of their knowledge. Here, it's signed by Nicholas Santoro Jr., who holds the important titles of Chief Financial Officer and Chief Accounting Officer. His signature signifies that Rithm Capital Corp stands behind the information in this filing. So to summarize Rithm Capital's July 28th announcement, they've released their financial results for the quarter ending June 30th. This is a big deal because it gives us a snapshot of their performance, impacting everything from common stock value to their commitment to preferred shareholders. The company utilizes a mix of common and preferred stock, each with specific dividend rates, and changes in interest rates are a significant factor in their financial strategy. While we don't have the explicit numbers from the press release in front of us, the filing itself points to the importance of these financial updates for understanding the company's overall health and market position. Now let's look at the bigger picture. Rithm Capital operates in a dynamic financial environment. Their performance is heavily tied to the real estate market and broader economic conditions, especially interest rate policies. If Rithm has managed its exposure to rising interest rates effectively, it would be a strong positive. Conversely, if they haven't hedged well, or if market volatility has impacted their asset values, we might see some concerning trends. The market will be scrutinizing how Rithm is navigating these complex financial waters. Are they demonstrating resilience and strategic foresight, or are they vulnerable to market shifts? The answers lie within those detailed financial statements that were released. For us at Corporate Decoder, what we really want to know is if Rithm Capital is growing its earnings consistently, if its debt is manageable relative to its assets, and if its preferred stock dividend payments are well covered by its operating profits. These are the indicators of a healthy, sustainable business. Any red flags might include declining revenues, increasing debt levels without a corresponding increase in assets, or a strain on their ability to pay those preferred dividends. Therefore, my take on this filing is that while it's a standard update, the underlying financial health is key. A strong showing would signal good management and a positive outlook, while weak results could indicate challenges ahead. We need to see how they're managing their various financial instruments and their portfolio in the current economic climate. The real story is in those numbers and how they translate into stability and growth for the company and its investors. Alright, that's our breakdown of Rithm Capital's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.